The market sold off hard today. What's going on? Are cryptos going down? Is the ship sinking? Is it time to get off? Or is this just another correction? That's what we're going to talk about right now. Why this happened, what's going on, and what I see happening in the future. So, first of all, the market's sold off, right? Today we're down about 5 to 10% across the board. We actually had rallied back up to about a 450 billion market cap, and it dropped under 400 billion today. It's back up above that as we stand right now. We're about 5 to 10% down across the board. Um, if you had entered any positions since December, most of the positions we've entered since December are unfortunately we're down on right now. But that's okay. We're used to this. We've been down on multiple positions plenty of times before. Going into January, we didn't have one single position down. Now we have some down, but they're going to come back up. Right now, Bitcoin is sitting on some pretty strong support. Hopefully it can rally from this bounce point around 10,000, 10,001. If not, maybe 9,200 is next. Pretty good support there. Maybe 8,800, 8,100 look like the next support. But hopefully we'll get a good bounce and then the market can kind of take back off again. We've been moving in this kind of sideways, choppy consolidation pattern now since, for the last couple of weeks, really most of the year. We peaked in mid-January. We had our low about 270 billion on February 6th. Since February 6th till now, March 6th, within a month, we'd almost doubled, gone up 100% since the low. We're a little bit off that today, but NEO's holding good support. ETH is down, unfortunately. Dash is down as well. It's a good buy. I like Dash. But what happened? What exactly caused this market sell-off today? It looked like things were just starting to take off, right? The market was just starting to find its footing. Things were just starting to stabilize, or so we had hoped. Well, as I always say, there doesn't have to be a reason for a correction, especially when the market has ran up super fast, which in this case it didn't. But there was a couple of things that we can look at today that basically say, shoot, especially when all of these are added together, it's easy to see why we had this correction. So we had a trifecta, actually 4 different pieces of news that came out almost at the same time. So first off, we had Japan. Japan, usually we're used to China with the FUD. This time it was Japan. But basically they said they're going to take action against crypto exchanges that are not complying with the Financial Service Agency. That's basically customer protections and AML, which is anti-money laundering. So anyway, they're going to take action. They're going to crack down on these cryptocurrency exchanges. I really think it came down to CoinCheck. If you guys remember CoinCheck and its exchange in Japan, basically what happened with CoinCheck is about a month ago they had a big hack. 500 million NEM tokens were taken. And the problem is it shed light on CoinCheck, which wasn't a really well-run operation. It wasn't really operating the way that Japan wants them to through the regulations. And so it kind of opened up the door to that. And what happens is, people want freedom, but they don't want responsibility. So we want the freedom to be able to move without regulations. But then if we have a problem like losing all our money, we want someone to pay for that. And so what happened is 500 million tokens of NEM were hacked. That created a big problem. People wanted answers. People wanted to get their money back. The government had to step in. And so they say, hey, if you want us to protect you, we have to regulate this. So that's what's going on. It's not a big deal. In my video for 2018, my predictions, I said the big trend in 2018 was going to be regulations. We're going to continue to see more and more regulations. I'm going to talk about more of that at the end. But what does this Japan news mean? Well, it doesn't mean a lot. This was about one exchange. It's not really operating within the regulations. Japan's going to continue to add more regulations. But I think overall, it's good for us because, as I said, 2018, the big trend would be with more regulation. And because of that, the big beneficiaries would be privacy coins and decentralized exchanges. And so our decentralized exchange picks from January should all do really, really good, as we see more and more of this. The second big piece of news that came out was the SEC. So the SEC is back in the news. They released a statement saying that they were going to look into potentially unlawful online digital currency trading platforms. That's a mouthful. Digital currency trading platforms. So trading platforms, right? Exchanges. That's what they're talking about. Now, the SEC has already made it very clear what their intent is with the ICOs, right? ICOs, some are considerable by the SEC now. The SEC says that in some ICO tokens are utility tokens, but some are security tokens. And security tokens need to be regulated just like securities, like stocks. So they've already said that. We already know that. But now what the SEC is saying is, well, also these exchanges may need to come in line with the securities laws. And then they even went a little bit further and they said that even digital wallet services could fall in that. So again, the news, more SEC regulation, going to crack down on exchanges, going to crack down on wallets. So again, we expected it. I think it's needed. I'm going to talk more about that at the end. But at the end of the day, what does it mean to us? Well, the SEC is just doing their job, right? Their job, the whole reason the SEC is there is to regulate these financial matters. That's what they're there for. So of course, they're going to try and regulate as much as they possibly can. So they're just doing their job. So what we're going to see with the SEC regulations is that we're going to see more of the bad actors kind of getting pushed out of the way, which I think is good, right? So we're going to get the bad actors out of the way. It's going to bring more attention and more money back to the solid projects, the projects that we're in on. And so that's going to be good for us in the long run. The other piece of news that came out today is FinCEN, the Financial Crimes Enforcement Network. They published a letter yesterday on Tuesday saying that they're going to apply their regulations to ICOs. Okay, great. More regulations on ICOs. We already have regulations on ICOs. Now, more regulations, I suppose, but where's the bad news in that, I guess is my point. All ICOs being done today are pretty much already working as if all these regulations are already in place. So by FinCEN saying that they want to apply their regulations to ICOs, it doesn't really change anything. We're already there. So more regulations, which again is more bad actors getting out, more of these scammy kind of fraudulent ICOs getting off the map. And so I think that's a good thing. Now, we had Japan, SEC, and FinCEN all come out and talk about regulations. The big news, I think, probably the biggest piece of news today was Binance. So if you didn't know, Binance was hacked. I saw that and I'm like, oh man, I use Binance. Did I lose all my coins? What happened? Well, Binance got hacked. That's what the news said. Of course, nobody has the time to read all the news. They don't really understand what that means. So let me explain. Binance was not hacked. What happened is some users' accounts were hacked. What happens if you have an account on Binance or Bittrex or Poloniex or any of these, they allow you to use like third-party apps with your exchange account. So for example, I use an app called Coinigy, and Coinigy allows me to trade all my exchanges from one location. I also use another program called Coin Tracking, which allows me to see my portfolio of all my exchanges in one place. Those are cool. What some people are doing is they're using like auto trading bots to trade on their accounts. And what happened is by using these bots, it allowed these users' accounts to get compromised. So beware, if you're using third-party bots like this or any third-party apps, it could potentially compromise your account. And so these users' accounts were compromised, and I'm not sure the exact details, how much was taken, if money was taken, or what happened. But that's what happened. So Binance wasn't hacked, but some users' accounts were compromised because they had these third-party apps. So again, the news was really bad. An exchange got hacked, another Mt. Gox. Everyone's afraid of having all their money taken, but that wasn't the case. But let this be a wake-up call to you. I know better, but still I need wake-up calls. I really got a wake-up call when Binance shut down for like a day a couple of weeks ago. But let this be a warning to you. Don't leave your coins on the exchange. Get your coins off the exchange. Don't leave them on there any more than you have to. Now, it's not totally possible to get every single one off. I mean, it's possible, but it's not realistic. So you're going to leave some on there, and that's okay. But just get as many coins off as you can, because if something like this were to happen, if Binance were to get hacked or any exchange were to get hacked, they were to get shut down, they were to get investigated, anything, your money could potentially, your coins could potentially be frozen or lost altogether. So only put on there what you have to put on there. It's one reason why you want to raise your limits on your verification so you can move large amounts on and off. Get as much off the exchange as you can. Now, so that's it. So SEC, FinCEN, Japan, and then Binance got hacked. 4 pieces of news. Now, I want to talk about just real quickly about regulations. Now, regulations are a double-edged sword, in my opinion. First of all, I think regulations are positive. I believe we need regulations. I believe it's going to give the market credibility. We want institutional money to come in, institutional money, Wall Street money. There's $200 trillion of that money sitting out there ready to come in. So we need the market to be regulated to give it the credibility so we can get this money in. That's the positive. On the negative is that these regulations could overburden new companies from coming in. It could stifle growth and it could stifle innovation. So there's pros and cons to both sides. Now, I am for regulation. You probably didn't want to hear that. I'm for regulations. But I'm not saying the SEC is the best person or the government is the best person to regulate. What I'd like to see is the industry regulate itself. I believe the industry could and it should regulate itself. If it were to regulate itself fast enough, it could keep the SEC and the governments off the back a little bit because they wouldn't feel like they have to come in and do so much because a lot of the groundwork would already be there. We see this happen in other industries. I'm going to use the supplement and nutraceutical industry as an example. The FDA, the Food and Drug Administration that regulates food and medicine, they don't regulate nutraceuticals and supplements the same way. And so what happened is, as you might imagine, there was lots of bad actors in the space, lots of people putting out really, really poor products. Well, some companies actually opened up to do self-regulation. And so now if I'm a supplement company or a nutraceutical, I might send my product to this third-party company where they can certify that my plant, my operations are clean, compliant, my ingredients are good, etc. My formulas are right, and then I get a stamp of approval from them. So the industry is regulating itself, and it's worked really well. Some might argue, and so I would like to see more solutions like that. Regulations are absolutely necessary for this to mature and really take off. But the three that we've seen today, they're not that bad. The market's overreacting. So what's going to happen from here? I'm sure that's what you all want to know. What's going to happen from here? The market has been trading in a sideways, choppy kind of consolidation pattern. I believe we're going to continue to see more of that. Bitcoin is trying to find its support right now. I don't think it's there. We probably need a couple more bounces before it can find its support. Bitcoin can take off first. The alts will lag behind. After Bitcoin runs its course, the alts will start to catch back up. I think we have a couple more weeks of this choppy consolidation pattern before we really regain our footing, before the bulls can get back. So hang on for a couple more weeks. The bulls are coming. None of this changes my 2018 forecast. I still believe Bitcoin will be 25,000. I still believe the market cap will be over $1 trillion. Whatever happens over the next couple of weeks doesn't change that. So stay strong, keep hodling, and to your success.